2021 was similar to 2020. We recorded an annual absorption of a little over 38 million square feet of space. However, 2021, we just had 8 months of operational business. Quarter 2, April through June 2021 was lost in the second wave. It was a complete washout. And then the effects of Omicron set in late November through December where decisions were deferred. So if I were to compare the performance of 2021 from a commercial real estate absorption standpoint, it records 38 million square feet of space taken up over 8 months. What it tells us is companies believe in the concept of office space. They feel office space is a flag of stability. They believe to imbibe culture of an organization, office space is required, and it, of course, fosters innovation and collaboration. Let's do a quick dipstick on how it compares to 2019, which was the record year of absorption for commercial real estate with 60 million square feet, and 2020 and 2021. If I look at at the outset, 2019, we had 12 months of operational business. 2020, we had 9 months of operational business with 1 quarter, again the second quarter being lost out to the first wave of coronavirus. And 2021, as I explained, we lost out 4 months. So we need to compare the performance and pick up the monthly average on the basis of 12 months, 9 months, and 8 months for 2019, 2020, and 2021 respectively. On that basis, 2019 we had average monthly absorption of 5 million. 2020, the average monthly absorption was about 4.34 million. And 2020, on a base of 8 months of operational business, we had an absorption of 4.76 million square feet, which means 2021, in that sense, has done better than 2020. On that note, what we can also look at is the period lost of the quarter in 2020 because of the first wave, and then the 4 months lost because of the second wave and the onset of Omicron. The cumulative pent-up demand in the market is approximately 32 million square feet. And you will have the numbers and figures that you can confirm this, which means, when companies come back to work and when the pandemic is settled, you're already looking at a pent-up demand of 32 million square feet. What we can infer of 2021 commercial real estate market in India is companies continue to take up space, and they've signed up close to 38 million square feet of space across 8 operational months of business. The market was clearly a tenant-favorable market, and great bargains available for occupiers who were willing to take up space. Landlords were largely flexible, except there was premium to be paid in CBD markets for premium properties. There is a pent-up demand of 21 months. Companies have hired net new employees close to 20 to 25%, and this demand is sitting on the fence and will come by in 22 and 23. There is a flight towards quality, and companies are looking at signing up quality office spaces. I will talk about it a little more in detail. And we are clearly in a liberated working environment, with work from home being a part and parcel of corporate real estate planning and portfolio. So there are 2 dominant sectors. One clearly is the IT/ITES, or the technology sector, which contributed about 28% of all space take-up. However, this contribution for 2020 was 38%. So in that sense is down by 10%. And primarily the reason from coming down from 38% in 2020 to 28% in 2021 is the third-party IT services companies have been on the fence and have not signed up large office spaces, and that is conversely or rather inversely proportional to the amount of hiring that these firms have done since the pandemic. The other sector, which is a dominant sector and emerging, is the managed offices sector, which has contributed about 15% of office space take-up in 2021. What we are seeing is most organizations today, from the onset of the pandemic, have been in these, as we call it, the 3 E's: evaluation, experimentation, and evolution, which means you've been evaluating the effect of the pandemic and how your business will cope to it. And as we speak right now, we are in an experimentation stage of having learned what the pandemic does to your business, hence to your employees, to your clients, and how you would, in that sense, look at your office space requirements. So we are in that experimentation stage, which means agile working, work from home, future of work, etc., or liberated working environment. And when the pandemic settles down, there is going to be a huge shift in the human behavior, in everything that we do in life, including how we go to work, which will be the evolution of the new office space requirement. So it's the 3 E's: evaluation, experimentation, and then the evolution. Now, when we all want to know and understand what is going to happen and what are my needs going to be once this pandemic settles down, until that time, when you are in that evaluation stroke experimentation stage, you want to have an extremely agile business, agile office environment, which means your leases have to be agile, and hence managed office spaces are coming to the fore, which is coming up and filling in that gap where there are shorter leases, customized office. At the same time, you're not investing in capex. So 2 dominant themes: technology, IT, ITS, which continues to be the big factor, and then the emerging big theme is the managed office space. The top themes for office space in the new year are going to be, there's a huge flight towards quality that will be visible, where corporates would be looking to sign up quality office spaces, which means a huge emphasis on ESG, employee wellness, net zero, green power, inclusion and diversity, and looking at signing at locations which mean employee convenience. We've always seen there's been a lot of ambition towards these themes, but now you will see tangible investments being made, and there is going to be a move from ambition to execution. You will see corporates making and demanding those requirements in office buildings, and from a supply side, landlords will understand, upgrade their assets and develop assets which include these themes. We continue to be in a liberated working environment, which means flexibility of lease is going to be core to corporate portfolio and planning. The managed solution space was being provided by third parties who came in between the landlord and the tenant, which will continue to be. But you will see both domestic and institutional investors or developers who will come and play this role, which means they will provide the lease, manage the office and the fit-outs. So you will have 5-year terms, amortization of fit-outs over 5 years, but a lock-in of 3 years, becoming a norm as we move forward. The debate on the death of office space has been raging since the onset of the pandemic. This will die down as corporates have realized over the past 21 months. Office space is a flag of stability. It fosters corporate culture, and you can innovate only when you can collaborate, and that happens in an office environment. Finally, if we have full 4 quarters of business, 12 months of operational business in 2022, we believe that we will be able to record 50 million square feet of office space, although there would be some portion which will come along as work from home.